Hi guys, welcome to this video, and in this short video we're going to cover the question, what is the swap? Now we'll cover what swap means, central bank interest rates, and swap formulas. The swap is a way to either get paid or pay just for holding a position. For example, at 5 p.m. Eastern, all accounts are closed and reopened. Central banks lend money to other banks at a certain annual interest rate. This interest rate is known as a discount rate, and each country has a different discount rate. Now, here's an example. These would change, but for example, you could have various currency or current central bank rates as being the Aussie at 4.25%, New Zealand dollar at 2.5%, euro at 1%, Canadian dollars at 1%, pound at 0.5%, Swiss franc at 0.25%, USD at 0.25%, and Japanese yen at 0.10%. These are examples that fluctuate over time. When buying currencies with higher interest rates than the quote currency, you will get paid. When selling currencies with higher interest rates than the quote currency, you will be paying. So here's an example. We have the Australian dollar at 4.25%. This is the base currency. With that interest rate, you will get paid. And with a lower interest rate at 0.25% quote currency, you will have to pay. If we look at the Aussie US dollar, you can see below in the formula, there's a difference there of 4%. Swap formulas. Swap for buy orders is equal to contract size times base currency interest rate minus quote currency interest rate plus broker's markup divided by 100 days per year. And similarly, for the swap for the sell orders, we have contract size times quote currency interest rate minus base currency interest rate plus broker's markup, 100 times days per year. Right, so here's an example of the Aussie dollar, US dollar for a full lot of $100,000. If we're buying the Aussie USD, the swap is 100,000 times 4.25 minus 0.25 plus 0.15 divided by 100 times 365. Right? And basically, the formula works out then to 11.37 units of the base currency. Now, we have another example here for you, but I don't want you to get too caught up in the formulas. I just want you to understand what the swap essentially means. And we can cover this more as we go into more details with some of our bigger courses.